and welcome to the fourth trading week in October. Definitely, I don't know, in November. I wonder if November has been a month to remember for you, but it depends on what market you're trading in. But here's what's coming up in the next 55 minutes. And Egypt's information technology sector, that's the IT sector, is getting attention as the country's IT annual export hit $3.7 billion. And Zimbabwe's currency woes is forcing the government to cut spending on certain budget items. And in East Africa, Kenyans at home smile as the country's diaspora remittances grew by 22.9% in October. It's great to have you join us. I'm Ladi Williams. Let's get a check on the markets now. We're seeing gold prices on track for the biggest weekly decline that was last week, but now we're seeing a bounce right there, $2,562. Earlier, we did see a marginal gain, but now we've seen things have flipped to the negative side. U.S. gold futures is down about 0.2%, $2,567 per ounce. So other metals we track not looking so good for silver. We see both benchmarks are having the biggest decline in a while last week, 0.3% up for platinum on the flip side, and palladium's trying to hold up there, $949, about 0.8% up. So, you know, King Dollar has taken an ease with the rally today. So we're seeing gold, you know, getting back some of the losses we got from last week. Let's get a check on what's playing out with oil now. We see oil prices edge up today after fighting between Russia and Ukraine that intensified over the weekend, although concerns about fuel demand in China, the world's second largest consumer of oil there, you know, capped some of those gains at $71.22 a barrel, 0.3% up. That's for Brent. The U.S. grade, that's also up from early trade today, still holding up $67.08. So it's still all eyes on geopolitics right now, and that's driving sentiment up there for the oil market. But that could change with another poor data coming out from China, all about demand right there. And outlook from OPEC already shows that demand will actually reduce. That's going forward. All right, to other stories now. The National Automotive Design and Development Council is saying it's set to begin local production of vehicle spare parts as it has established the necessary structures and frameworks for the commencement. The NADDC Director General Joseph Oshanipe disclosed this during a conclusion of a 2-week automotive engineering and software design training held in Abuja, organized in partnership with a South Korean firm. The initiative is aimed at reducing Nigeria's reliance on imports, which currently cost the country $1 billion annually. He explained that the council is committed to transforming Nigeria's automotive industry by increasing the percentage of locally manufactured components in vehicle assembly. It aims to go back to the period where the country had assembling vehicles that have up to 40% locally manufactured components. That'd be nice to see. Well, as the Yuletide season gradually approaches, economists have projected that Nigeria's headline inflation would reach 34.45% this month. According to Cowrie Asset Management Limited, supply disruptions as well as the seasonal effect across the country would ultimately push the inflation rate further above the 34.19% level, which it peaked at in June. The projection is hinged on the facts that structural challenges, which include inadequate infrastructure, high energy costs, and logistical inefficiencies continue to hinder the efficiency of anti-inflation policies. The country's headline inflation remained elevated for the second consecutive month in October and reached a 4-month high of 33.88% this month, up from 32.7% in September, due to higher costs of food and transportation, which is attributed to increase in the price of petrol. And the Nigerian Exchange Limited has proposed new rules on block divestment and large volume trades. This was made in a notice to trading license holders signed by the Chief Executive Officer of the NGX Regulation Limited, Mr. Olufemi Shobanjo. Part of the proposed change includes a transfer of shares or acquisition of additional shares of 80 million units or more of the company's total listed shares or trade value equal or above 800 million naira within a period of 1 year from the date of the first transfer or acquisition of shares shall apply for and obtain the written approval of the exchange before executing such large volume trades. The NGX regulation says the changes and the proposed amendments will help close gaps that could allow non-compliant behavior, reinforcing transparency and accountability while enhancing the NGX ability to monitor meaningful changes in shareholder structure and safeguard market integrity. All right, it's all about budgets. Reactions continue to trail the proposed 2025 budget put forward by the federal government. And I had a chat earlier with the CEO, Nairametrics, Ugodre Obichukwu, on Business Morning, and he finds the current debt servicing cost worrying. Take a listen.
Yet again, we are going into another, year of budget that could see us incur a significant or a sizable budget deficit. The budget deficit that we're seeing based on, MTF. By the way, MTF, which is the medium-term expenditure framework, essentially just is a set of assumptions that guides how government plans its fiscal policy over the next 2 years. It's basically done every 2 years. So this time around, the MTF is suggesting a budget of 47.9 trillion in terms of total budget expenditure. However, again, revenue is largely short of that. Revenue is just shy of 30 trillion. So we're already looking at a fiscal deficit of about 13 trillion in 2025. Ladi, put that into context. Last year, I think fiscal deficit was about 9 trillion. 2023. When I say last year, I mean this year, 2024 budget. 2023 budget happened to be, I think, one of the largest fiscal deficit we had incurred before now. It was around 11 trillion or so. Now we're seeing 13 trillion. This is obviously record fiscal deficit. And when you say fiscal deficit, for those who don't understand, for viewers who might not know, it means additional debt that the government needs to borrow to finance the budget shortfall. And going by their plans, they plan to borrow fresh 9 trillion, a combination of course, local debt borrowing and then foreign debt borrowing as well, and then hoping that the likes of the World Bank, or IMF, which we tend to call multilateral organizations, and then of course, bilateral countries, maybe the likes of Brazil or China or India. We just saw the India president visit a couple of days ago, could now chime in the balance. And that's how the government plans, to address its deficit. But here's the catch. I'm looking at this and I'm seeing, oh my God, in this particular budget, the debt service alone is going to go up around 15 trillion naira on debt service alone. That used to be Nigeria's entire budget for a year, but we're doing 15 trillion already on that. Now, compare that to capital expenditure, which is about 16 trillion, and then compare that to recurrent expenditure of 14 trillion. So you see that as much as we continue to do deficit financing, our debt numbers continue to balloon, and the cost of servicing those debts never get cheaper.
Right, so that was earlier on Business Morning today. But right now, we're going to be looking at some economic data for the month of October. Central Bank of Nigeria's October Business Expectation Survey, you can call it BES, showed a decline in overall confidence index, OCI. The OCI fell to 14.5 points from 17.7 points in September, indicating a dip in optimism among businesses operating in the country. Also, Nigeria's Purchasing Managers Index as a PMI that did to 49.6 index points in October 2024. That's according to the Central Bank of Nigeria. Then the Stanbic IBTC Bank Nigeria PMI for October shows how we see output that fell at the fastest pace in 19 months. As Nigeria's private sector activity that worsened further in October. That's according to the Stanbic IBTC PMI. The headline PMI settled at a 19-month low of 46.9 points from 49.8 points in September. Well, joining us now to analyze most of this data, we have Dr. Olusegun Omisaki, is the Chief Economist, Nigerian Economic Summit Group. Join me right here in the studio. It's great to have you.
Yes, too. Thank you.
Yeah, so definitely, I can imagine looking at all of this data, it can somehow dampen your economic spirit.
Yes.
And your spirit generally.
Yes.
You know, at this point, we see the businesses not expecting so much goodies.
Yeah.
Consumers are expecting higher prices.
Yeah.
And I know it's not good when consumers believe prices will continue to go up. And it seems like I've been reporting inflation for so long now in Nigeria, and I'm getting used to it at this point. The prices are going to keep going up.
Yeah.
How are you seeing all of this data?
Yeah. Well, you've said it all. Well, let's ask this question. Let's look at the environment within which the businesses are operating in Nigeria, because to a very large extent that determines what we're going to see in terms of their performances and expectations. So there are critical frameworks. The first one is the macroeconomic environment. So this is the performance of the macroeconomy, or the stability in the macro level, determines or signals whatever information you're going to get from the businesses. And we can conclude that we are seeing at a very turbulent state now. We have key indicators. Let's just mention two. Inflation, you've mentioned that, and interest rate environment, very, very out of control, if I may put it that way. The second framework is what I call the consumer or the household sector. This is like the micro sector. You've also mentioned that if the aggregate demand is every day's weakness coming down, you will expect that impact on businesses. People have to reallocate their resources into something else, maybe more now into food, or kind of have delayed, consumption, and that will impact the business environment. The third level is even the second, in between the macro and the micro, is the meso, and that talks about the interaction between or among the firms or businesses themselves. So you only push the cost you've acquired to me, and then I will push that to the other businesses. So it's a very complex situation, but the only solution or anything that will signal something coming out better is when we look at the performance of our macro stability. So macro cannot be totally removed from how businesses will be performing in Nigeria. So it's not a surprise, as it were. You cannot have a very optimistic or improved business performance in Nigeria when the inflation is at this high, and the interest rate too. We don't know what will happen now, whether the central bank will maintain that or jack it up. But you can see that you may not see anything coming down,
right?
Because that would be disastrous.
Yeah, because it's quite incredible. You see most developed economies already cutting interest rates, they are nearing their inflation targets. Some have surpassed their inflation targets, like the UK. So I'm quite jealous of those countries. But, when we look at business cycle, you have the peak, then you see when it's going down, you have recession, then there's depression, there's a trough, then some kind of recovery, then maybe expansion.
Yeah.
But it seems for the longest time, it seems we've been in that depression stage.
Yeah.
If you're looking, depending on where you're looking at most of this data, from, I'm wondering, since this government, from the APC government, from parts of the PDP government, we had complaints upon complaints. Do you see us leaving this cycle? Because we know businesses and economy, they move in cycles. So when do you see us leaving this particular cycle we're in? Where we're reporting inflation rising again. We're seeing revenues hitting lows, debt rising. Where's the light at the end of the tunnel?
So let's consider that business cycle. Actually, I want to believe that it may not be that appropriate to use that business cycle framework to explain what we are going through, to be sincere.
Okay.
The assumption of business cycle has nothing to do with the current heavy reform situations that we are going through. Right. The business cycle means that even when you don't have huge external shocks, things are going normally, a time will come when the aggregate demand would decline, and then it will pick up. That's why it looks so natural.
Right.
That's why people can come out and say, oh, let's predict what will happen in the next 5 years in the US economy. Oh, they're going to be. Those are natural movement of business, right? But what we are going through is unnatural, if I have to put it that way, because these are outcomes of serious economic reforms. And while most of the businesses also support the philosophy of these reforms, I think the approaches or the strategies are quite debatable. You can debate that. You can say, oh, government should have done one or the other. But I think to determine how long we're going to be at this level is to also go back to the macroeconomy, to see how long the CBN, especially, will be able to achieve inflation targeting, one, and at what cost to interest rate. If the CBN can look, and I think it's clearer now that the CBN will start that conversation around the structural rigidity in the system beyond just using the instrument of interest rate to capture inflation. Rigidities such as you have that, the food inflation is massive. We have to improve the production on that side, and so many other business challenges. So maybe it's time for us to start looking at those monetary factors that are driving inflation. That's number one. So if we do that earlier enough, you're going to see some better performances from the businesses. The longer it takes, the longer we remain like this. And again, I think the other part is also the side of the welfare, the household. When you have the implementation of the minimum wage for people, it's going to improve the nominal consumption or aggregate demand, but not real, because the real value is already removed. So I think the situation we are now calls for us relooking into or rethinking the strategies for the reform. They are purely reforms aftermath, in my own belief. Right. And it calls for a serious look into how we can manage the outcomes.
I guess some would say, why the rush with the reforms, even though we know that, at the end of the day, the government needs to find a way to balance revenue and expenditure, and most of the things they were spending on, before now, we heard they cannot continue like that, even though we've seen some of those subsidies partially, come back. And you did mention minimum wage, and we've seen the budget proposal for 2025, and it seems like recurrent expenditure is being propped up due to this maybe 70K here, 80,000 here, depending on what states you're looking at. So definitely looking at the budget in totality, how's that going to play into trying to arrest inflation and somehow spur growth?
Well, that's a big question, right. and it depends on the school of thought where you belong, how you think the economy in Nigeria responds to stimulus or budget. But I think the budget is huge, the proposed one. We don't know how this, of course, is going to be more than that. Right. Supplementary, or even this, the National Assembly adding some items around there. The budget is huge. So fundamentally, if you look at it from that macro view, it's going to drive inflation more. That's given. One, from all those frameworks that I've mentioned also, from the lowest part, consumers now have more power to consume more. Assuming the challenge we're going through now is because of the fact that people don't have the capacity to purchase, and that's why the producers don't produce more. You assume that when they have more, then producers can have, can produce more. But the producers might not be able to even meet up with the enhanced demand that will be coming up because of the structural challenges they are going through now. So I think we may have next year, at Q1 next year, January, February, March, and we may have to start looking at the critical part of the economic cost, which is inflation. So this might leave the space of the businesses alone now. It might even be a huge factor that will be affecting the household. And again, I predict that the real income of households will decline further, though the nominal income seems to be on the high because of that 70. And again, what percentage of people really are we talking that will be collecting this money? What percentage? You look at from the local government, the state, and the federal government, how many people do you have there? This might not suddenly be what the private sector will implement suddenly. So, but I foresee that the CBN needs to do a lot next year. If we go on like this, and we don't have that strong structural solution to inflation, and then we have this budget coming up, we may be reaching something very, very high that nobody really plans for.
We've heard experts talk about what the weights the monetary side is carrying, and what the fiscal side should also be bringing to the table at this point. So, in your opinion, are you seeing improvement when it comes to the fiscal side of things right now?
Yeah, it depends. Yeah, I think the fiscal side has been very slow, but I think again you could see some of the signals from the fiscal side. This minimum wage is still coming from the fiscal side. Tax reform that Mr. Taiwo is still battling with is still coming from the fiscal side.
Quite a battle there.
Yes, and I think when it lands finally, the impact might be huge, to be sincere. But before then and now, the fiscal cycle is more on the longer term than the monetary. And so people feel the instant impact of interest rates, inflation, compared to government spending. The spending might take depending on the channels anyway, but might take a longer time before you can see it arresting the situation. But let's see how things go. But I think fundamentally we just need to address more of our structural challenges that we are having with business operations in Nigeria. It's huge. Sudden improvement in fiscal side might not solve this problem, really. It's huge. The infrastructural gap we have is massive. Regulations, very hard. And so many other factors that we may start looking into beyond the monetary factor. But again, 2025 will be a huge gift for us if we get it right.
Right, and we've had complaints that most of the bulk of the work is falling more on the consumers at this point. They're having to pay more, for everything. Yeah. So I'm wondering, looking at the political class, do you think at some point they would actually feel what the consumer is feeling and allow political will do what is right?
But yes, if I had to ask you that question, what would you say?
It's for you at this point.
No, just guess. I'm now the host. Now, answer that question.
You're the host now. I don't see it.
I don't see it also. Because these are different classes of people. Unfortunately, they are exposed to different levels of economic situation. They have so many buffers they can use, but the ordinary Nigerians don't have that. They are also, most of them are also can be taken care of by whatever opportunities that come within the system. But the ordinary Nigerians don't have that. So I don't think we should look at the question of whether the senators or our leaders, if they are feeling it, then maybe they will do something. No, they don't need to feel it before they do something, and they will not feel it. And so I assume
there's no way they can.
Yes, if doing something is based on that, they will feel it, and then they will do it. Then it means they won't do anything.
Or maybe just feel the pain of the consumer.
They can hear the pain. They can listen to the pain. They can view through channels, see people, but really they can. That's not the way it works, especially in this our current system. And I think that's another issue entirely. I don't think they are feeling it will be what will lead to the. But I hope that the policymakers, the real policymakers in both sides of the monetary and the fiscal sides, will keep doing what they are doing and listen to people more. And then I hope that very soon we should be able to have some at least.
Maybe if we could all switch sides for one day. Maybe. Thank you so much. Great having the conversation with you, Dr. Olusegun Mishaki, Chief Economist, Nigerian Economic Summit Group.
Thank you.
Thank you so much for coming on today.
Thank you for having me.
All right, we'll take a break now. When we come back, we'll head straight to the markets, get a sense of what's playing out in the local bourse and global markets that we track. That's in a moment. Stay with us. Welcome back. So it's the fourth trading week of November. Things are playing out really fast. Well, let's get a sense of what's playing out with the local bourse and global markets that we track. We have Anete, editor, with the details. Great to have you.
Happy
Anete.
New Week, laddie.
Happy New Week.
And November is gradually also, I think it's halved, one halfway full, half
right.
empty.
And the fourth week, third full week.
Yeah.
So has it been a November to remember?
Well, it's too close to call.
It's
just too close to call because in terms of where we always start with the equities market, we know we have
maybe for the crypto market. Maybe.
Yes, for the crypto market, it will be.
And maybe for Tesla.
Tesla, 8% jump at just Monday intraday session.
Right.
Of course, that's really a November to remember. But so far, for Nigerian stock market, it's not really a November to remember because it's just a 0.1% month to date. But so far for the year, plus 30.7%. So can you beat that? We're still in a good size of a return on investment.
Even though you're not beating inflation, but yeah.
Yeah, inflation at 33.88%, of course. And we have one analyst they've said 34.45% is what they're expecting for the month of November. We're still in November, so that will come out sometime next month. Okay, so now let's take a broader picture at intraday market performance, starting off of especially number one on the Nigerian, on the local bourse, 0.03% intraday, picking up from where it ended the week. Last week, the market was up about 0.5%. Of course, the market has been able to, to continue. Last week we saw back and forth from the market, starting from Monday, just like a baton swing for the market, but so far it ended the week in a positive terrain and picking up at intraday 97,757.02 for the domestic bourse. And of course, the positive sentiment also trickled down into the Johannesburg Stock Exchange, the Johannesburg All Share Index, up 0.74%. That's quite strong for the market at intraday. And of course, it's still climbing from the previous level of 83,000 to 84,493.13 for that market. But on the flip side of the market, we see red colors there printing for the EGX 30 down more than half of a percent, 0.55%, 31,080.70, while the Nairobi Stock Exchange closed at Friday 115.01, so almost falling below the 115 point, down by 0.30%, but that was on Friday for that market. And now let's talk about Nigeria's financial markets, where we will be looking at what to expect for the market. First of all, starting off with currently, right now, the Debt Management Office that's on behalf of the federal government is targeting to raise about 120 billion naira from the federal government bond auctions, and that's via the reopening of the 19.30 FGN April 2029 bond paper, which is at 18.5%, as well as the FGN February 2031 bonds paper. So that's it for today. And at the same time, for the Treasury bills market, the central bank will be conducting a Treasury bills auction. That's what we call the PMI, a primary market auction, on November the 20th. That's on Wednesday, so that's always about 2 weeks. So at about 610.8 billion maturing bills will be on offer at that NTB auction for that market. And let's see other things to expect from the market. For the foreign exchange, we've been talking about the Naira's volatility against the dollar. The Naira keeps on being hammered, and of course, the value has always been eroded, has continued to be eroded against other baskets of currencies. But against the supernatural currency, that which is the dollar, street market, and the official market rate is still on the high side, so analysts are expecting that the volatility is expected to continue, and this is due to FX demand pressure outstripping the supply, by the legitimate users. Then finally, on what to expect, cautious trading is expected due to the absence of strong catalysts to boost sentiments. So this is coordinated by Channels Business Research as well as Coders Research. Now let's take a bigger picture at the fixed income market, and we bring in Caleb Alimi to tell us more about the market. Last week we saw the inflation numbers printing higher, and of course it's still expected to come to go higher. So now, Caleb, thank you for joining us first, and then can you give us the details of how does this play into the fixed income market, the inflation number for October?
Thank you for having me, Anita. The inflation numbers for October, like you rightly mentioned, bucked the trend, and we saw its trend upwards, which we expect, given all the changes that happened in the month of September and October. We expect that trend to actually continue, given the fluctuations we continue to experience in the price of PMS. Now, how does that affect, the bonds market? We expect that largely interest rates will remain elevated around where they are. Like you rightly mentioned, the DMO is offering 120 billion. At the primary auction today. The last auction they offered 180 billion and they sold about 280 billion, and this month they're offering 120 billion. We expect them to oversell as well, to sell around 200 billion or thereabouts. We expect interest rates to remain elevated. Ideally, given the inflation rates, given the body language of the CBN, which is contractionary, we expected, interest rates to actually spike to around 22% levels on the 2031 paper. But let's see how, given that it's a Dutch auction system as well, different people come with different rates. We expect that it will moderate around the same rate where it closed at last time, about 21.75, and just slightly under 22% is what we expect for the bond auction. So given what inflation is doing, given the contractionary approach by the CBN, we expect interest rates, especially on fixed income instruments, to remain elevated.
Okay, so now let's talk about the FX side of things. Yes, Nigeria's external buffers, what you call the foreign exchange reserves, it has sustained that accretion. As at last week, it was up by $117.98 million and climbed higher to about 40.24 billion naira. And also, we saw a little bit of reprieve for the naira, but how is it moving at intraday against how is the naira moving against the dollar at intraday?
It's steady. I would say it's steady, barring any intervention from the CBN. The CBN has, what the reserve does for the CBN is gives them the confidence and the firepower to come in and provide supply every now and again to sort of like moderate the rates. The CBN has said they're really after exchange rate stability and not appreciation. They want the rates to remain stable, and that's what we see that they do. When there's too much volatility, they come into the market to supply and just keep things moderate. The CBN has consistently intervened at around 1640 to 1645, 1630 to 1645 levels, and they continue to do that throughout last week. We expect them to come in this week as well to continue to intervene around those price points. What it does is it is kept in affects, just plus or minus 10 naira around that band, which is pretty much stable for them, and that's their target, and that's what they'll continue to do. The higher FX reserves, gives them the confidence and the firepower to do that. So we expect that it will see stability. In the parallel market, which we don't pay much attention to, you could see volatility there, but in the NAFEM window or the NAFEX rate, you see that there's a lot of stability around there, thus helping the CBN achieve, more like the CBN is achieving its objective.
Okay, so finally, Caleb, just in 20 seconds, which is my magic number, what is your expectation, apart from the Treasury bills auction, which will be conducted on Wednesday this week, what are your expectations for both the fixed income, for the Treasury bills market, the bonds market, and the OMO markets?
Yeah, given what I see on the liquidity this week, I expect that there will be an OMO auction sometime this week. Market is about 300 billion long, 300 billion positive. Typically, we've hovered around the negative territories, and we're also entering, the era where we'll be hearing information about FAC, and FAC should come in towards the end of this week or early next week. So we expect that there should be a CBN open market operation, which is the OMO auction, anytime from now to come and take out that liquidity. We expect the bond auction to also, take out a lot of liquidity because they'll be selling more than what they put on offer. We also expect that the NTB auction, they may also oversell. All of these activities are going to really take out money from the system and just keep rates elevated. So the outlook for the rest of the month will be for rates to remain elevated.
Elevated. Well, we keep our eyes out on that and see how it ends with your forecast. Thank you so much, Caleb Alimi, Chief Dealer with Providence Bank, for the market numbers at intraday for the fixed income markets.
Thank you for having me, Anita.
Okay, so Ladi, I think we're out of time, but just in a nutshell, the Middle East market mostly positive movements, and for the U.S. market, the stock futures, they were mostly in the, mostly positive, except for the Dow Jones Industrial Average. Like you mentioned, NVIDIA, as well as Tesla, they've helped these markets to grow up. And then for the Asian markets, we see mostly lower numbers for the market, except for the Hang Seng and the South Korea index.
Right. I guess the Trump trade easing right then most of those markets. But thank you so much, Nancy, for breaking it down for us. But let's take it on to London now. We have Juliana join us from our London studio. We see data out in the UK, consumer confidence. That's dipped already in November. How are you seeing it, Juliana?
Good afternoon, Laddie. Yeah, not great news as we are just 5 weeks away from Christmas, which is a really important time, not just for retailers, but for consumers alike. And I think retailers in the UK are desperate to claw back some of those lost earnings. But there's just so much going on in the market. In fact, last week, I think we had a slew of economic data that wasn't great for consumers in the UK that are already struggling with the cost of living environment and the broader global economic issues which are affecting consumers in the UK. So S&P Global have released data from a survey they conducted looking at consumer confidence. And as you said, it has dipped. Lots of this has been attributed to the budget that we received last month, the first Labour fiscal announcement, basically saying that there will be cuts and £44 billion worth of tax hikes. And I think for lots of consumers, particularly small to medium-sized business owners, they're really concerned about the increase in national insurance for employers, which means, of course, they're going to have to pay more to keep their staff. And many businesses in the UK just simply cannot afford it. SMEs, as we know, for any decent economy, are the backbone of the economy. It's not the big multinationals. It's the small stores on the high street that keep an economy ticking. And with lots of what was announced in that fiscal statement by Rachel Reeves a couple of weeks ago, there are fears, and they've been trickled down into the data that S&P have released this morning, on top of all of the other issues which were announced last week. For example, the ONS released information from the labour market showing that unemployment had increased. We also had data from Kantar, which is a food data company. They also showed that prices at the checkout have increased too. So even though, you know, we have changed administration and there did appear at one point to be hope on the horizon, the fact that it's getting freezing. Energy prices are going up, food prices are going up, unemployment is going up, not great. And we can see that consumer confidence is going down. And on top of that, it's going to snow in London tomorrow. That's all we need to add to the cold mood. More cold weather, Laddie.
More cold weather. And I know, regardless of this data, I know you're still going to get me my Christmas gift anyway.
Of course. Of course, it should be on its way to you.
Right. Then we see the Center for Economics and Business Research, CEBR, they've issued a warning that Trump tariffs could hit the UK GDP by shaving off about 1%.
Yeah, it's quite a big story, actually, and I think this is going to be lots of food for thought for Prime Minister Sir Keir Starmer, who's currently in Rio de Janeiro at the 19th G20 summit. Of course, Nigeria's President Bola Ahmed Tinubu is also there. But quite interestingly, Sir Keir Starmer, the Prime Minister, has just met with Xi Jinping. In fact, it's the first meeting that a British Prime Minister has had with the Chinese leader in about 6 years. I think it was Theresa May, who was the last leader to meet him. Why does that matter? Because it's not just the UK that are fearful about potential Trump tariffs. It's also China, of course. We'll remember, because we discussed it almost every day, didn't we, Laddie, during Trump's last tenure, that the trade tariff wars between China and America was really strong. And of course, it affects everybody. But as you were saying, the Center for Economic Business Research have issued a warning saying that if if, and it's a big if, Trump does go down the line of imposing a 20% tariff on goods going into the US from the UK, then it could shave about 1% off our GDP during his administration. And that's really alarming, particularly as, you know, we are still trying to get ourselves back up and running after the dip of COVID-19. So there are major concerns, I think, particularly because we know that the Labour Party haven't done well with Trump, particularly during the campaign. Sir Keir Starmer did say that he and David Lammy, the Foreign Secretary, did meet with Trump at Mar-a-Lago. They had a couple of hours over dinner. Is that going to be enough to sustain and maintain that relationship so that we could potentially get to a free trade agreement? That's what has been promised for years and years. We're still nowhere close. But 60% tariffs on China, 20% tariffs on the UK. That's what we're hearing about. This is going to affect a vast swathe of UK industries, particularly luxury car exports, whiskey. That was a big one during his last tenure, as well as pharmaceuticals and machinery. These are going to be discussed at G20. Yes, Biden is there. We know Trump isn't going to be there. But I think, you know, leaders will be gathering to discuss how they are going to emerge scathe-free from a Trump administration and ensure that the cost of living crisis that we're all, it's affecting all of us, is going to be eased. But we shall have to wait and see.
Yeah, we have to wait and see, definitely. But talking about the markets at this point, what's playing out? Brand new trading week.
It's a brand new trading week. Lots of stories, actually. House prices have dipped. House prices in the UK, it's the first time in a couple of years, they've dipped by about £5,000 a year-on-year average. It's still very expensive. It'll cost you about £350,000 to get a house in the capital. That's a big story. Also, Shein. I don't know if you've heard of Shein, very popular fast fashion online brand. Apparently, they're considering a London IPO. That's got markets talking. And then also what I mentioned very briefly, which perhaps we'll discuss later in the week, is the fact that energy prices in the UK are set to rise by another 10%. Not great reading for those already struggling. But having a closer look at the numbers, the all-share is up 0.21%. FTSE 100, the blue chip, laddie, that's up by 0.28%. And the FTSE 250, the domestic market, is down by 0.01%. In the currencies market, the British pound is currently trading up against the US dollar by 0.02% after a week of the dollar rallying against the pound. But the pound is down against the euro by 0.11% and up against the Japanese yen by 0.21% at intraday, laddie.
All right, thanks for that, Juliana. Definitely investors get excited about most of these IPOs. Thank you so much for giving us the details right there, what's playing out in the UK. All right, now let's get a sense of what's happening in Europe. We see U.S. President-elect Trump's putting his administration together, and the world is wondering how American policy will change on many topics, including trade, among those worrying politicians in the EU and other parts. Well, Lars Holter is with DW and brings us more. Great to have you, Lars. So what is the latest you've been hearing out of Washington?
Thanks for having me, Ladi. So we got word from a senior economic advisor to U.S. President-elect Donald Trump. His name is Stephen Moore. He's a conservative connected to the Club of Growth and the Heritage Foundation. That's two very right-leaning think tanks. Now, Stephen Moore said over the weekend that the UK should align itself with the United States on trade rather than pursue closer ties with the European Union. That is just as the chief of the Bank of England had said the UK should try to improve its trade relations with the bloc. So UK Prime Minister Keir Starmer is facing competing demands now over future trade deals with Washington and Brussels. In recent weeks, some have told the Prime Minister to pick a side between the US and the EU, while others have suggested he could strike deals with both major players.
So what exactly is Moore suggesting, and why does he think the UK should find a way to connect itself to both sides?
Well, it seems under Donald Trump there won't be any kind of both sides politics. Trump has made it very clear that it's all about America first, and we know that he wants everyone else to fall in line, pledge loyalty to him, and not even try to forge relations outside his realm of influence. So Moore is now setting the stage for a new administration. He said that America has a free enterprise economic model and that it's superior to the, quote, more socialist European system. Now, we've heard the term socialist thrown around a lot throughout the campaign, with Trump easily calling anyone a socialist, Marxist, or communist if they don't sign up to the most extreme libertarian teachings. He has railed against any form of regulation and such, and as I said, he expects others to do the same. So this advisor, Stephen Moore, is in a way threatening the UK now, saying that if the country would move towards economic freedom and the US, that it would spur the Trump administration's willingness to do a free trade agreement with the UK. He says this, of course, as a suggestion, but it kind of sounds like a threat too.
Right. So what are investors looking at the market?
Well, we're not seeing much action in early trading. I guess we're kind of stuck with the DAX in Frankfurt, so close to that magic level of 20,000 points. But there's just too much going on to make that final push actually happen, whether it's the election of Donald Trump or the government crisis in Berlin or the uncertainties around the conflicts in Ukraine and the Middle East, as so much is currently changing in the geopolitical environment. What will it take to move stocks a bit more, and maybe a few warm words from the European Central Bank? Christine Lagarde and two other ECB members are scheduled to speak later today. Investors are currently expecting interest rates to drop further in the EU. We'll see if there's any new indications coming out and if it will move markets.
All right. Thank you so much, Lars.
Thank you, Ladi.
All right, let's get a check on other stories now. And coming out from other parts of Africa, we see Egypt's information technology sector that's experiencing unprecedented growth, with over 175 companies establishing more than 195 outsourcing centers across the country. These centers employ over 145,000 specialists, exporting digital services worth more than $3.7 billion annually, according to the Minister of Communications and Information Technology in Egypt. The minister explained that the sector has transitioned from a basic service provider to a productive economic engine. And Zimbabwe's currency devaluation is forcing the government to cut spending on certain budget items. And the country's treasury asks government departments to prioritize their spending commitments for the rest of the year, as non-wage budget support will be severely constrained. Country needs to mobilize additional resources to cover critical, unavoidable expenditures, including 2024 bonus award, food deficit mitigation, agricultural input support, and utilities. And that's according to a circular to the departments. And Kenyans living and working abroad increased the money they send home by $18.7 million between September and October 2024. This saw the total money sent home last month hit about $437 million from $418.5 million a month earlier. Compared to a similar period last year, this was an increase of about 22.9%, when the foreign remittance stood at 46 billion shillings. That's about $355 million. All right, now let's get a sense of what's playing out in the crypto market. Let's see if the Trump trade euphoria is still there. If we look at the color on the screen, right there, it's mostly green, with the king of the altcoins, that's Ethereum, that's red, down about 0.7%. Binance, not looking bad. XRP, that's a big run there. And we know there's a relationship between XRP and XLM, that's Stellar Lumens, that's also going up. So I'm sure that was expected, after seeing XRP up. XLM definitely looked like a no-brainer. All right, let's look at some cryptos that have hit new highs today in the market. We've seen the likes of Mantra, and that's up by 58%. Intraday trade today, $4.53. So that's a new high for Mantra with a ticker OM. Non-playable coin at MPC, that's up about 30% today at 6 cents. That's a new high for that one. Ponke, 71 cents, up 21%, new high also. So these are the coins with some of the coins that hit new highs today in the market. All right, let's get a sense of what to expect. Now, joining us is Chimeze Chuta, Chairman, Blockchain Implementation Steering Committee, joining me via Zoom. Great to have you on the show.
Yeah, always a pleasure to join you, Ladi. How are you doing today?
I'm doing okay. Basking in that euphoria with most of these markets. But, you know, that bullish sentiment is here again. And some people, you know, might end up making life-changing money. Some might lose money they can't afford, you know, to lose. And some might just stay, you know, where they are, maybe not in the market, just on the sideline. What's your advice to those getting lost in this euphoria of higher prices in the crypto market, new highs?
Okay, so to be honest with you, most of us are just pure gamblers, really. And a lot of people don't like that. They want us to use some kind of technical jargons to justify that you could be an expert in this. But most of what people do in crypto is gambles. And if it falls in the direction where they expect, they are happy, and if it doesn't fall, well, they talk in their losses and move on. So my simple advice is always to have a risk-based approach to the crypto market, especially at this time when even ancient coins turn green for no reason. So it's very important that you manage your risks appropriately. And remember, the rule in crypto is don't invest more than you can afford to lose. It's still the same yesterday, it's still the same today, and it will continue to be the same as we move forward in the bull market itself.
Right, regardless of that hot euphoria you see right now with prices jumping all over the place in the crypto market, you still need to keep your cool at this point. But I know it seems that the Telegram game ecosystem, you know, most of those tap to earn games, it seems, I don't know, for me, it seems they're cooling off at this point, or is it still a thing?
And well, of course, we got to the point of the euphoria, and I think we're gradually cooling down, and expectations were not met, and people are really reluctant to engage in their time and their energy in things that probably they don't think that is going to eventually reward them. Previously, there were signs that it could be very rewarding, but the recent listings of most of those tokens has not been very favorable to most of the participants in the games. So that's part of the reason why they are not having that same kind of momentum that they had a few weeks ago. But all the same, the industry tries majorly on speculations, on hypes, and narratives that align with what people's intents and interests are at a particular time. So you can consider the era of the Telegram app as gradually a faded norm now.
Right, and you're talking about norms at this point. Are you expecting more altcoin ETFs, to pop off at this time? We've had the Bitcoin ETF. We've seen all the outflows and inflows. Now it's all about record inflows. What are you seeing for altcoins getting into that ETF trend?
Okay, so the general assumption that alts are like basically different flavors of ice cream popped in different kinds of containers. There are alts that actually represent technology and innovation. And some of these alts that are being used by DeFi platforms or NFT platforms or alts that support stable coins and other kinds of innovation, dipping or real world assets. These coins have inherent value in them. So as we see the bull market, begin to heat up, we're expecting that some of these alts, yes, even some ancient tokens like XRP, like XLM, like as you mentioned, Cardano, and a couple of them have suddenly resurrected for one reason or the other. So we are going to be seeing much more alt movement, especially when Bitcoin dominance begins to drop a little bit. We need to get up to a 52% Bitcoin dominance for us to see any significant alt market to be rejoicing about.
Right. I guess all the rejoicing right now. Let's see if they get more to rejoice about, most of these investors. Thank you so much. Chimize Chuta is the chairman, Blockchain Implementation Steering Committee. Thank you so much. Always great having your perspective.
Yeah, thank you, Ladi. Bye.
Alrighty then, so that's how most of the markets we track are looking, talking about the global markets and the local bourse right here in Nigeria. We'll bring you more updates tomorrow, but thank you so much for watching. You can watch us again on our YouTube channel. Just flip over to YouTube and search for Channels Television. You can watch all our production. You can also visit our website, www.channelstv.com. For me and the team right here at Channels HQ, it's bye for now.